Let us look at a case where two partners join a partnership firm. A and B are partners, sharing profits and losses in the ratio of 5:4, or in other words, 5/9 and 4/9. Two new partners M and N join the firm, and the profit sharing ratio becomes 3:3:2:1. 3 plus 3, 6 plus 2, 8 plus 1, 9, or in other words, 3/9, 3/9, 3/9, and 2/9. M is to pay 40,000 for his share of goodwill, but N does not have sufficient cash to pay for goodwill. Both the new partners introduce rupees 2 lakh each as their capital. You're required to pass the necessary journal entries. Now, first thing first is that you know how much is being paid by M for goodwill, but you are told that N does not have sufficient cash to pay for goodwill, right? So first thing let us do is let's create a broad outline as to what are the entries which will be passed, right? So first is for capital account. I'm going to pass the entries this time separately for capital account. So bank account debit to M's capital account to N's capital account. How much? Both of them bought 2 lakh each, right? So the total money that has come in is 4 lakh, right? You're told that M bought 40,000 as his share of goodwill. What is the share which M got? M got 2/9 of the share, right? So let's calculate the value of goodwill. M got 40,000 for 2/9 value of goodwill. If you use the unitary method, the value of goodwill will be therefore equal to 40,000 divided by 2/9, or simply 40,000 into 9 divided by 2, which will give you 1,80,000. How much is N's share of this entire thing? N has got 1/9, and therefore the goodwill which he has to bring, N's share of goodwill, will be how much? It should be 1/9 of 1,80,000 or 20,000. This is the amount he did not bring in. This 40,000 was brought in by M, right? So let's pass on the entry for the second part, which is what is bought by N. So we will debit the bank account to goodwill premium account, okay, which is by 40,000. Kindly note this is only in respect of M's share, right? The third entry which has to be passed is to transfer the goodwill premium to partner's capital account. So I will pass an entry which will say goodwill premium account debit 40,000. Since N did not bring any cash, there was no credit to the goodwill premium account for him, but he has to anyways pay this 20,000. So what we are going to do is we are going to debit his capital account, which was credited here. N's capital account debit 20,000 to. Now this credit has to go to the existing partner. Who are the existing partner? A and B. In what ratio? The sacrifice ratio. So let's find out the sacrifice ratio for A and B. The sacrifice ratio for A will be his old share, which is 5/9 minus the new share, which is 3/9. Take the LCM. 5 minus 3, 2/9 is what is sacrificed by A. Let's look at B. B's old share was 4/9. His new share is 3/9. So what he has sacrificed is 1/9, right? 4 minus 3 or 1/9. So the ratio in which they have made the sacrifices for A is to B is 2:1, or in other words 2/3 and 1/3. right? So this amount of 60,000 which has come in should be credited to A's capital account, to B's capital account in the ratio of 2:1. 60,000, 2/3 to A, 1/3 to B. So we'll give a credit of 40,000 to A and 20,000 to B. Let's go back and see if there's anything else which we have to do here. You're required to pass the necessary journal entries, which is what we have done, right?